Welcome to Specialist Lending Solutions Television. I'm Group Editor Victoria Hartley. Let me introduce our guest today, Mary Grundy, MD Second Charges at West One Loans, here today to talk about how the pandemic has offered another lens to look at this sector. Now, debt consolidation and home renovation are obviously two of the top reasons borrowers search for a loan. But Mary says the reasons people need this product are ever changing. So obviously, the return of this market has been far faster than predicted. Predictions of second charge lending exceeded 90 million in March, representing a 31% month-on-month increase. This is up just over 20 million on February's almost 70 million of lending. So what's happening out there, Mary? A huge welcome. Thanks for joining us.
Thank you for having me. Yeah, no, certainly. I think if the estimation for March comes to fruition, then that will be a really great story for the second charge market. I mean, I don't think it's any secret that the second charge market was hit quite hard during the pandemic. It hit a crisis low of 21 million in May. Obviously, as a direct consequence of the economic fallout from the pandemic, and it was just such a fast changing situation. Naturally, credit risk adjustments had to be made. We had limitations in terms of the number of products that were available. So to see this recovery come around so quickly is fantastic. And I think it's testament to the brokers that support the second charge market, how resilient they've been. And I think part of that is they had to make some quite difficult decisions early on, but that's obviously made them stronger as we move into the recovery stage of the market. And I think now what we're really seeing is quite a lot of pent up demand from borrowers. Some of the more popular loan purposes we see, I know you've touched upon debt consolidation, but also home improvements. I mean, that's been a story in itself during the pandemic as more and more people work from home and want to make changes to their whole lifestyle, and that obviously involves where they live. Just making their homes more amenable to home working perhaps, but we've certainly seen a lot more demand for home improvements. But no, it's really good to see. And I also think that from the start of this year, quite early on, we did start to see momentum building in inquiries. And I think us and other lenders in the market have made quite a lot of positive changes. I mean, we're still not back to our pre-COVID position from a credit perspective, which makes these numbers even more pleasing, really. But I think there's been a lot of activity out there from lenders who are keen to support the market like ourselves, and hopefully that'll continue into 2021 as we move through the year.
Okay, thanks, Maureen. I mean, you've touched on it yourself. It's created a changed world for many. I mean, home renovation, my goodness, people absolutely sick of the four walls they found themselves in, desperate to change. Just one of the many situations people never expected. Those situations are often converting into second charge cases. And I just wondered, can you give me some examples of some of those cases, some of the cases West One is seeing at the moment?
Yeah, I mean, certainly. I mean, I think, we're seeing lots of different types of borrowers come to us. So, clearly there's an element of borrowers who want to reassess their financial situation following the pandemic and put themselves into a stronger position. But we're also seeing borrowers that are what you would not necessarily associate as a stereotypical second charge borrower. So borrowers with higher valued properties that are looking to do sort of high end home improvement projects and can benefit from the flexibility that second charges can bring, certainly in terms of loan size, for example. So I think those are two key areas, as well as things like property purchases. So that's again something we're seeing increased demand for, obviously helped along by the stamp duty holiday. But it's another way of being able to access equity quickly through a second charge and have the flexibility of choosing their own conveyancing partner rather than rely on a panel conveyancer as you would probably have to do via a remortgage. So certainly those are the three key areas I would say we're seeing for second charge demand right now.
Lovely, thanks, Maureen. Just moving slightly to the in another direction, self-employed mortgage applicants, and they notoriously struggled to find homes with mainstream lenders since COVID struck. Um, what can charge lenders do to help this sector?
Yeah, so obviously, I think for self-employed borrowers, they're definitely going to need the assistance of professional mortgage intermediaries to obtain advice because there's, it's more difficult for self-employed borrowers right now to obtain traditional mortgage finance. And I think one of the areas that we can help as second charge lenders is that generally cases are underwritten on a more of an individual basis, so we can really take the time to understand that borrower's individual circumstances. I mean, one of the key things obviously is, what line of business they're in and how plausible it is that they've been able to continue trading. I mean, we see the flip side of that, where obviously some businesses have really been thriving under these extraordinary conditions that we've all been working in. And also, self-employed borrowers are clearly entrepreneurial, so they've adapted their businesses to suit the changing environment. So I think it's really understanding, how they've been able to continue trading and how sustainable that income is going forward. What work have they got lined up, and what can we do to be able to demonstrate that there is long-term affordability there. But it is just really being able to take that time to understand that individual borrower's situation, so we can see if it's something that's suitable for them in the long run.
Can I ask as well, post-pandemic, I gather another slight change is loan sizes. So can I ask what the average secured loan size is at West One, and if that average has been getting larger recently?
Yes, I mean, our average loan size is in excess of £60,000. So we have seen that gradually increase. And again, I think that comes back to what I was mentioning earlier, that we're seeing more demand for larger loan sizes from borrowers with, significant income levels, higher valued properties. And again, some of these property purchase transactions are by nature larger loan advances, as are some home improvement loans as well. So that's certainly driving loan sizes up. I mean, obviously, I think the housing market, we're in this situation at the moment where it seems to be reacting pretty well to the pandemic. We know obviously that there's a risk, there's a possible bubble at the end of this. But I think for those borrowers that have got really good levels of equity in their property and not really relying on sort of the higher LTV lending, then that is really an opportunity to access that sort of loan size, which might not otherwise be available.
Thanks very much, Mary. Please make sure you come back for the second half of the interview with second charge expert Mary Grundy, MD, second charges at West One Loans. We'll be back soon on Specialist Lending Solutions.